Since the introduction of quantitative easing, deeply worried investors have been asking one thing: will the US currency collapse? It's an intriguing subject that may look realistic on the surface, but a financial crisis in the United States is doubtful. Hey, welcome back to Economic Insiders. Give this video a big thumbs up, and don't forget to subscribe to this channel. It's free. Now, let's move on. So, what and why currencies collapse? Currency collapses have occurred over the years throughout history. Since 1900, Argentina, Hungary, Ukraine, Iceland, Venezuela, Zimbabwe, and Germany have all experienced severe currency crisis. Depending on how you define collapse, the Russian currency crisis in 2014 may also be regarded as an additional example. Any collapse is caused by a lack of trust in the stability or utility of money as a store of value or medium of exchange. When people lose faith in a money's value, the currency is dead. This can be caused by inadequate valuation or pegging, persistent poor growth, or inflation. Will the US dollar survive? Several possible scenarios might lead to an abrupt currency collapse. The most realistic theory is a dual threat of rampant inflation and unsustainable debt, in which increasing consumer prices compel the Fed to hike interest rates rapidly. Because most of the national debt is made up of very short term assets, an increase in rates would function similarly to an adjustable rate mortgage once the teaser period expired. If the US government is unable to meet its interest payments, international creditors may dump the dollar, causing the currency to collapse. Consumers may dump the dollar if the United States enters a severe recession or crisis without bringing the rest of the nation with it. Another possibility would be for big power, such as China or a post European Union Germany, to reintroduce a commodity based standard and monopolize the reserve currency sector. However, even under these circumstances, it is not certain that the dollar will fail. The dollar's collapse looks very uncertain. Only the potential of further inflation looks reasonable among the assumptions necessary to trigger a collapse. Overseas suppliers such as China and Japan do not want the dollar to fail since the US is such an important consumer. Even the US had to refinance or default on certain debt commitments. There is no sign that the rest of the world would allow the dollar to collapse and risk contagion. The US dollar is not the reserve world currency, although being most widely used. The International Monetary Fund had authorized four more reserve currencies just since October 2016: the euro, British pound sterling, Japanese yen, and Chinese yuan. The dollar must have competitors as an international reserve currency because it offers the rest of the world a hypothetical substitute if American officials take the dollar down a detrimental course. And the American economy is still the world's largest and most influential. Even though growth is slowing dramatically after 2001, the American market continues to surpass its European and Japanese competitors. The dollar is supported by American worker productivity at least as long as American employees continue to utilize the dollar pretty much exclusively. But the basic problem of the US dollar is that it has only been valuable due to federal fabrication. This vulnerability is mirrored by every major national currency in the world and is seen as typical in the current day. However, it was judged a pretty silly notion as recently as the 1970s. The concern is that without the limitation enforced by a commodity based monetary benchmark such as gold, governments may inflate too much money for political agendas or to engage in war. If the Federal Reserve generates money and the US government adopts and generates revenue debt faster than the US economy grows, the currency's value may collapse in absolute terms in the future. Fortunately, for the US, nearly every single other country is supported by equivalent economic policies. Even if the dollar collapsed in real numbers, it may still be stronger worldwide due to its dominance over the alternatives. But Europe is in a mess. As it strives to handle the COVID 19 outbreak, it is preparing for another crisis, this time a financial one. To maintain the survival of the single currency at the core of the European Union, the EU's leaders must collaborate in ways they have previously rejected. Adoption of the single currency has resulted in several benefits, ranging from smoother trade to greater international standing. However, The euro compelled member countries to abandon a sovereign monetary and fiscal policy that may effectively underpin national debts and banking institutions. As a result, bank instability poses a substantial threat to individual governments' finances, and conversely, the so called doom cycle that played out in dramatic form during the early 2010s, nearly ripping the eurozone apart.